Thanks a lot, Valine. And thank you to Abigail for the invitation. It's an absolute pleasure to join everyone this morning. And, I think congratulations to Guyana for embarking on what we think is an exciting journey and an era of prosperity and a whole lot of learning, yeah? So let me just get to the my presentation. Okay, so the discussion this morning is about optimizing oil and gas molecules for a sustainable Guyana. And I've spent the last 10 years working in the Middle East, based out of Dubai, predominantly in the energy sector, oil and gas sector, but with more emphasis on gas as opposed to oil, only because we see gas as being part of this energy transition future. So I have now relocated to Florida, where I have set up a company called Amaris Gem. And Amaris Gem is all about energizing your business. We bring a wealth of advisory and consultancy, as well as we supply various technology to the oil and gas sector. Okay, so this morning's agenda, we start with a very quick history of oil and gas in Guyana. We move on to where we are today. What is the situation today in oil and gas, the development and production strategy, some macroeconomic indicators, the path to sustainability, key policy items, opportunities in the value chain, and of course, the future of oil and gas. So let's jump right into it. Of course, Guyana is sort of like the new kid on the block. You kicked off somewhere in 1984 with the World Bank. And then in 1991, we saw one offshore block given to ExxonMobil or licensed to ExxonMobil. However, in 2007 was really the turning point where Guyana was able to settle those maritime disputes with Suriname. And of course, that brought back in the multinationals. So we saw that first production sharing contract or production sharing agreement signed back in 2007. And again with Exxon. And of course, Exxon now considered to be pioneers in the oil and gas sector in Guyana because of this history, yeah? But of course, I think what they really found was a treasure chest of oil and gas. And this alludes to the hydrocarbon system. And as you can see from the diagram, the better the permeability and the better the porosity of the sedimentary rock makes for an excellent hydrocarbon system. It means that you can extract those oil and gas molecules very efficiently and very cost effectively. Okay, moving on. So where are we today? So as you know, there's been a total of 18 discoveries with a resource base or reserves of about 8 billion barrels of crude oil and crude oil equivalent. Production has started at the Liza-1, estimated at 120,000 barrels per day. And they have moved on to the field development, the approval of the field development plans for Liza-2 and Payara. Now, if you look at it, Payara's budget is estimated at $9 billion US. And by comparative, the GDP of Guyana is estimated at around $6.8 billion. So you can see the kind of investment that the foreign IOCs or international oil companies bring to Guyana. We expect that by 2030, production will increase to 750,000 barrels per day. And according to Rystad Energy, that could go up to or peak at 1.4 million barrels per day by the mid-30s. So as you can see from the graph from my table down in the right-hand corner, you can see where the Liza 1, 2, 3, 4, and 5 were successfully appraised together with Payara. And this really has been the way forward for Exxon to begin to do the field developments for those successful appraisals. And I expect that the appraisals will continue, and I expect that the field development plans will also continue. Whether Exxon gets to the actual 8 billion barrels per day, or whether they ramp up production before that, beyond that 1.4 million barrels, is left to be seen, because the world is changing and changing very rapidly. Okay, so this really speaks to the kind of development and production strategy that has been led by Exxon and its partners. This really is the Liza 1 field. And you can see that Exxon has chosen to use an FPSO, which basically is a floating vessel that will process the oil and gas. On board this vessel, you have what we call separation units, where the water, the gas will be separated from the oil, and the oil will be cleaned up and stabilized before being loaded onto tankers and taken off to export markets. I think kudos to Exxon and partners for achieving a fairly low break-even cost in Liza 1 and 2 and Payara. You can see the break-even at between $25 and $35 per barrel compared to the average break-even for deep water, which is around $44 per barrel. So that's critical in an environment where we have fairly low oil prices. You know, oil seems to have gotten stuck within that low $40 range. So it's absolutely critical that Exxon and the government keep a very low cost. Low cost really means a higher oil rent for the country. Well, actually, just to go back, one point of contention was the disposal of production water and gas. You know, there's been a lot of dispute of how the water should be disposed and whether the gas should be flared. So, you know, with the water and the gas injectors, it's a good way of disposing of that production water and gas. And of course, that's intended to maintain the pressure in the well, and also to push those oil and gas molecules towards the production wells. Okay, so of course, with oil and gas comes an abundance of wealth. And you can see here that Rystad Energy has forecasted or done different forecasts in terms of the government revenue and government take. And it can range anywhere from $96 billion to $310 billion, depending on the price of oil. And you could see how it compares with Trinidad and Tobago and Suriname. So it's pretty lucrative, yeah? And again, looking at some sort of macroeconomic figures, 2020, you can see the growth at 26.2%, and that was actually downgraded from about 80% because of COVID. And the IMF expects an average GDP growth of 13% over the next 4 years. And as you can see, with the graph above, as the revenues and government take begins to increase, so too does the GDP per capita, moving from about 6,594 all the way up to 17,000 $627 per capita. And you can see the comparative with Trinidad and Tobago, Suriname, Brazil, Nigeria, and Angola. So undoubtedly, the oil and gas is going to bring additional wealth to Guyana. Now, Guyana is not new to mining or the extractive industries. You have quite a bit of bauxite, gold, diamonds, etc. So the oil and gas is simply going to add to your current extractive industry. So this is a fantastic model. It's the Natural Resource Charter Decision Chain from NRGI, which is the National Resource Governance Institute. And you can see it sort of paves a path to sustainability. On the left, you have your earnings or your revenue from selling your oil and gas. And as we move to the right side, it's about investing in people. And I think Adam spoke to that. And of course, what we call productive assets, assets that will generate returns for the people of Guyana for generations to come. So basically what the government has to do is set up their vision and establish policies where we can see the efficient and effective transfer of oil rents into people and into growing productive assets. So the path towards sustainable development is Guyana getting a good deal. That has been discussed extensively and debated extensively over the last couple months. And of course, it all begins with your exploration and licensing allocation. It must be done on a competitive bidding basis. It must be transparent. And this ensures that you get the most competent, the most technically and financially competent investors at favorable terms and conditions. Of course, local effects. Adam spoke extensively about building local content, building skills, and this could be done through the existing PSA contracts and the local content legislation. Nationally owned companies, I think it might be wise for Guyana to look at setting up a national oil company and again, employing highly skilled personnel and begin to really manage the oil and gas resources for Guyana. Revenue volatility, it would be recommended that Guyana look at setting up a sovereign wealth fund. And this really is what we call a counter-cyclical measure. And again, it will be about investing in the future and investing in what we call liquid and illiquid assets. And of course, you got private sector development and government spending. So I just want to go back to the production sharing agreement, again, which has been extensively discussed. And that production sharing agreement is fundamental to the revenue generation. In other words, it embodies what we call a fiscal regime by which the government earns its revenue. And essentially, there are four main components of a production sharing agreement. You've got your 2% royalty, the 75% cost oil, 30% tax, and profit oil at 50%. On the right-hand side, you can see the analysis done by Rystad Energy, which puts Guyana just down to the lower level there at 60% government take. On the left-hand side is the model that I have done. And you can see the government take is similar, but I accounted for a 30% tax rate. So this model is great. I did it on an Excel spreadsheet. I can change any one of those parameters and begin to forecast government take and government revenue. Okay, moving on. If we take a more sort of a micro look at the industry, what I've put up here is the petroleum value chain. And predominantly, Guyana at the moment is focused on what we call the upstream sector. On your right-hand side, circled in red, you can see some of the services and inputs that are required for the petroleum sector, but these are also transferable skills, not just focused on the energy sector, but across all sectors. On the left-hand side, we see the kinds of services that are focused on the oil and gas industry in particular. So these are the kinds of skills that are required to provide input to the upstream sector. So you're looking at petroleum engineering, geology, mud engineering, drilling engineering, mechanical and electrical engineering, and a host of other technical services. Now, if we move down into the downstream sector, my focus is more on gas, because I believe that we can harness those gas molecules for gas to power. And I also believe we can harness those gas molecules to grow the gas processing sector. We can produce a variety of NGLs, LNG, LPG, and also what we call green and blue hydrogen. Moving down into transport and storage, and I think Delmar will speak more to it, but there's an opportunity to grow what we call a small scale LNG sector using a model of virtual pipelines to move LNG from production site to the customer's premises. And of course, underpinning all of this is where you have your partnerships. Now, partnerships in the oil and gas sector is critical. As I said, I spent a number of years in the Middle East, in Dubai, and you cannot build a successful industry without having the right partnerships. So I guess the takeaway is to encourage Guyana and the people of Guyana to build partnerships, whether it's through private partner, the PPP model, joint ventures, or simple distributorship and agency agreements. And then finally, is there a future for oil and gas? We are living in what we call the period of the Anthropocene. It's a geological epoch that says that human activity is driving climate change. And we've seen some of the large oil companies like BP, Shell, and Total stating that we've either reached peak oil demand or we will reach peak oil demand by around 2030 as we move to a zero carbon-based economies. Yeah. However, based on our assessment, we believe that the gas industry is still going to play a major role in the energy sector. And this is why we encourage wherever you find those gas molecules, we need to optimize it. Whether it be in gas to power, for power generation, whether it's for industrial purposes, or whether it's to manufacture hydrogen. And hydrogen is going to become more and more prominent as we transition to a greener economy. And of course, the future of mobility. A lot of this oil and gas or the fossil fuels is consumed in the transportation sector. And we expect a shift to more electric vehicles and a shift to what we call mobility as a service, transport as a service, and developing what we call mobility hubs, which will include both fossil fuels and electrification.
Okay.
So finally, this is my final slide. That's it. So what we look forward is a Guyana that is diversified, a Guyana that looks after its environment as well as developing its what we call productive assets and developing the people